Welcome back to another episode. I'm your host, Ryan Richards, a residential loan officer, real estate investor based out of Massachusetts and Rhode Island. Today I'm bringing another solo episode talking about what happens when you go under contract on the purchase of your first property. You've heard me on previous episodes talk a lot about the preparation, how to make sure you build a nice team, make sure you have all your finances in a row, and you give yourself enough time to prepare for the purchase. But what I haven't talked about yet is what actually happens when you go under contract. How does the loan process work? And what are the typical steps you can plan for and expect when you buy your first home? So stay tuned to dive through the process. What's going on, everyone? Excited to bring this topic to the discussion today. Surprised I haven't talked about it yet before. We've obviously talked a lot about the planning process, identifying your buy box, property management, and when it comes to the loan process, a little bit about the products, the programs, and some different options available. But what we haven't actually talked about is what happens when you get a property under contract. How does the financing process work? What steps can you expect and be prepared for as you enter into the purchase of your first home? So let's talk through those. Now, one thing to note is the process actually differs from state to state. So in Massachusetts, for example, we have a two-contract state. We're an attorney-based state. What that means is when you make an offer on the property, that offer contract that you sign ultimately gets revised and put into a purchase and sale agreement within a week or two after your contract acceptance that's reviewed and prepared by real estate attorneys. Different than in a state like Rhode Island, the offer you make actually gets put right on a purchase and sale agreement form up front. It's prepared by the real estate agents. The attorney will still close the loan, but the real estate agents are actually the ones drafting the final purchase and sale agreement at the initial offer stage. So that will be one key difference as we talk about this. Depends on the state that you're in. New England can vary quite a bit, but today we'll be focusing on Massachusetts and Rhode Island. So you hear the good news. You see a property on Saturday, you make an offer over the weekend, Monday or Tuesday you get a call saying, congratulations, your offer has been accepted. What happens next? So assuming for this example you're procuring a loan, most home buyers in today's day and age are getting financing. What's going to happen is your real estate agent is going to send you over instructions to make a deposit to bind the contract. That's a very important step of the process. It has to be some sort of monetary exchange to make that contract binding. So you'll make a deposit to bind that contract. In Massachusetts, since again there's two contracts, the initial deposit's usually fairly small. Typical deposits we see range from $1,000 to up to $5,000 to bind that initial contract. But it really depends on your financial situation and the terms that you negotiated in with your offer. Obviously, the more you put down at deposit can show stronger offer. The seller has a higher confidence level in your commitment to the property because you put more money up front. It's your skin in the game. That'll be the first step in the process. As that happens, what you're going to want to do, and your real estate agent will be guiding you through this, as well as your lender at this point, is send the real estate contract to your mortgage lender, because they need the contract in hand to be able to prepare the loan disclosures. So the loan disclosures is the first formal step in the mortgage application. With the contract in hand, your lender is going to prepare the loan disclosures for you, which again, this is the formal start of the loan process. The lender can't start working on a mortgage until you actually sign those disclosures, giving them permission to do so. So what's on those disclosures? Well, it'll be another formal review of your application. So you'll take another look at all the questions and answers you have on the application, making sure the information's accurate. And of course, it will break down all of the numbers for you. So what's your interest rate, your closing costs, your monthly payment, and the details of the loan. Does the loan have a prepayment penalty? Is the interest rate adjustable? Is it fixed? All of those details will be indicated on the loan disclosures. As you sign the loan disclosures, if you're paying for a loan appraisal, at that time your lender will send you a link to pay for the appraisal. So you pay for the home appraisal, so that can get ordered and scheduled, and you'll sign the loan disclosures. And that kicks off the loan process. Now, the process really has two parts to it. So the loan side, which we're talking about right now, and then you have, I would say, the agent side of things, really, which is focused on the property itself. So at this same time, you're probably going to be scheduling likely a home inspection with your real estate agent, and potentially getting some quotes, negotiating inspections. That's all happening while we're procuring the loan at the same time. So these two channels are working in tandem. So you have the loan disclosures in front of you, everything looks good. You sign the loan disclosures, you pay for the home appraisal, the appraisal gets ordered and scheduled. So we actually send an appraiser out to the property to walk through and get a sense for the condition of the property. The appraisal is really important for the process. The appraiser's job is to determine a fair market value for the property based on data. So they're looking at other comparable homes in the area that have sold, typically within the last 12 months, plus or minus within 20% of the gross living area of the property. So they're looking for homes that are similar to yours. And they're essentially comparing and contrasting the differences and similarities. So let's say your home's a 3-bedroom, 2-bathroom. They're looking for other 3-bedroom, 2-bathroom homes that have sold within a mile radius in the last 12 months. They'll make adjustments between the two. Let's say one of the comparables they have is a 3-bedroom, 1-bath. They'll make an adjustment between the homes for only having 1 bathroom versus 2 to basically try to reflect what would that home have sold for if they were the same. And the appraisal ultimately becomes the bank's metric for the valuation of the property. So it can impact your loan, your terms, and gives you a good sense for what equity you have in the property when you move in. So a really important part of the process. That gets ordered at the same time the loan disclosures go out, but it takes typically a week or two to actually get that scheduled, the appraiser to review the report, and actually send back data to us. As the appraisal process is kicking off, so again, you sign the loan disclosures, you have paid for the appraisal, the lender ordered and scheduled the appraisal. At that point, your file moves into what we call loan opening. So loan opening essentially means in the background, we have ordered the appraisal. We're going to order a title report with your real estate attorney or title insurance company, depending on what state you're in, to look at the chain of title for the property. So part of what attorneys do is they look back, depending on the statute, typically 50 years, at the chain of title. So title is essentially your ownership claim to the property. So they're going to look at recent sales, maybe foreclosures. There might have been, some easements to the property that have been recorded, so giving people other rights to access your property. All sorts of different things come up in the chain of title. So their job is to make sure that everything on the title looks clean and there's no potential concerns for you to take ownership. You don't want to take ownership of a property if there are pre-existing disputes or difficulties with the clarity of who actually owns the property and what rights are given based on the chain of title. So that's all happening in the background when we enter this first step. Typically that process is all initiated and completed within 24 hours. So we order everything and allow the parties to start working on those processes. So within 24 hours, or typically 24 to 48 hours of application, you have signed the loan disclosures, you've got the appraisal payment complete, your lender's ordered the title report from your attorney, they ordered the appraisal, and we start processing the loan application. So at that point, depending on your lender, we work, I would say, pretty quickly. So within that same 24 to 48 hour window, my processor, who is going to review all the documents associated with the loan, is going to reach out to you to request any potential updates or loose ends before we submit the file for a formal approval with the underwriter. So that might be, hey, can you send me a copy of your new pay stub? I noticed the bank statement we have is a little bit older. Can you send me an updated bank statement? Where did you make your deposit to bind the offer? Do you have a copy of the check? So just some loose end documents so that when the underwriter looks at the file, they have everything they need to issue a formal loan approval. Once that step's complete, the file's into underwriting. We've gathered some of those loose end documents. The underwriter reviews the file, references the guidelines, looks at the contract, and actually approves the loan application. The underwriter is the only one who can approve the loan application, which is a really important thing to note. Because what we do up front with our pre-approvals, as you heard me talk about in previous episodes, is I actually have my underwriter review the file before I issue a pre-approval to make sure everything's buttoned up. Because some loan officers might miss something. Now, of course, I pride myself on never missing a guideline and making sure anything we tell you is 100% what we can do. But that's not always the case. And you want to make sure that your loan officer has done this step to give you that extra assurance that once you're under contract and the underwriter actually looks at the file or re-looks at the file, there's no concerns. Once you have your loan approval, the processor again will reach out to you with potentially some conditions on the loan approval. So the loan approval might come back with 3 or 4 conditions. We need you to get a home insurance policy. We need you to send us a copy of your earnest money deposit check, which you might not have already had available to you. If it's in Massachusetts, we'll need a copy of the purchase and sale, which probably hasn't happened yet. And we could need a few, again, miscellaneous items. Depending on what showed up on your credit report, might need a few explanations and so on and so forth. Provided we can satisfy all those conditions of the loan, your loan would then be cleared to close once we gather all of those items. But the condition list on that first approval will have a few of the things we just mentioned. One of the conditions of the loan will be a satisfactory appraisal report. It will be a satisfactory title report. And we'll have to document all of the deposits you've made to bind the contracts, or get a copy of the purchase and sale, again, if it's in Massachusetts. So your loan approval comes back to you with items on it you have to gather. The processor for the loan team will reach out to you to go over those items and help you to gather everything needed for underwriting. One of those items, again, will be a home insurance quote. So it's actually on you as the buyer and the borrower to go get your insurance quote from the provider of your choice and show the lender that you have sufficient coverage. So I think oftentimes that's misunderstood because lenders have to estimate a home insurance number as they're pre-approving you for a property, but that's not on the lender to provide or guarantee the accuracy of. It's actually a quote you go out and get. And depending on the property, they can vary quite a bit. So you'll actually go out, you'll shop for your home insurance policy, you'll send it back to your lender saying, here's my policy, we confirm it meets the guidelines, and we're going to move forward with that policy through closing. Now, that all happens within, again, probably 72 hours of application. If your lender's on the quicker end of things, they're getting everything processed for your loan, all of the necessary third-party orders out. So again, appraisal, title, and other things like verifications of employment are all getting ordered within those first 3 days behind the scenes. That's why it's important you make sure you send the contract to your lender once the offer gets accepted. A lot of real estate agents will do this for you, but some actually don't. So make sure as your offer gets accepted, you're sending it to your lender so you can start working on the loan quickly. Because other loan companies, and if this is the case, you should definitely give me a call because this is not how it should be, will take a week or 2 to get you through underwriting or even an underwriting approval. So obviously that can delay things if it takes you 2 weeks to get an underwriting approval and there are some conditions on there that might take a little bit of time to get. You want to make sure you get this done really quickly to speed up the loan process and make sure you feel comfortable that everything can get done on time. So now we're at the point where you have your loan approval, you're working on gathering those conditions for underwriting. One important date in a lot of real estate contracts is your mortgage commitment date. So as we're working on these things, we're working on these items with a date in mind, and that's your mortgage commitment date. So if you see on a real estate contract, it'll say typically a mortgage contingency. That's a contingency in the contract that will allow you to get your money back if for some reason you can't procure financing. So it's to protect you in the event you can't get a loan. So by that date, whatever is selected by you and your real estate agent at the time of making an offer, we need to make sure we have the financing set and ready to go. So gather all those items that we just talked about. Underwriters reviewed everything, signed off, and ultimately cleared your loan to close. Because once that date passes, if for some reason you're not able to get financing, you don't have access to your deposit again. I've seen clients with other lenders miss this date and actually lose their deposit. I had a client who lost $10,000 on their earnest money deposit because another lender denied them financing. They came to me to try to save the deal after the other lender said no, but there was nothing we could do to save it. The lender missed a few really critical pieces of information that this borrower should have never gotten a pre-approval in the first place, and he ended up losing $10,000. So be mindful of that commitment date. A lot of times, and depending on the lender, especially if it's a bank or a credit union, they might not watch that date for you. And if it's a non-attorney state like Rhode Island, they might not watch that date for you either. So you have to be proactive and make sure you're watching that date and communicating with your lender, hey, are we looking good for a commitment? Are we going to be able to clear this loan to close by next Wednesday? And then get a copy of your commitment letter. You should get a copy of your loan commitment from your lender that shows a list of everything that they need to clear your loan to close, so you're aware of the task at hand. Now, someone like myself, I'm very proactive with the loan commitment. I make sure that all of my borrowers are aware of the dates, the items needed, and communicate if for some reason we need to extend that commitment date or contingency date to protect you. If for some reason there's a document that takes us a little bit longer to get, maybe there's some items in the appraisal report that have to be fixed, whatever the case, we make sure we protect our borrowers, but not every lender does. And again, I've seen people unfortunately be put in tough situations. So be mindful of that date. Now we're going to assume, of course, that commitment date comes, your loan's clear to close, what happens next? Well, a lot of times I say it's hurry up and wait. At this point, you've cleared your loan to close, you've gathered all the paperwork, you've already completed your home inspection and been satisfied. You're basically just waiting until the closing date. But during this time, it's really important you don't make any changes to your finances. If you go out and get a new car loan or a new credit card, it can impact your financing. We can actually redact that clear to close we gave you because your financial situation changed. So before you do or make any changes to your finances, especially when it's credit related, you have to make sure you talk to your lender before you do something. Because I've seen it happen. Someone doesn't know. They're out all excited shopping for furniture on the weekend. They're at Jordan's Furniture and Jordan says, hey, you can buy this with cash or with a special discount, 0% financing, no APR. We're gonna let you pay it back to us over 12 months. They go, okay, great. They sign up and we determine it's actually either a new credit account, whether it's a loan or a credit card, that now adds a new debt to the equation that doesn't allow them to qualify for the loan anymore. So you just wanna make sure you're really careful of things like that during the loan process. A few days before closing, we'll have the final numbers prepared. We'll send you over a copy of your final closing disclosure, which will have all the final numbers you'll need to bring to closing. Those numbers could be a little bit different from the initial summary as we get real estate taxes specifically from the town. We get some items from the seller side. Maybe they have an oil tank that you're paying for some oil on, whatever the case may be. Those final numbers, you'll ultimately bring a bank check to closing. Can't be a personal check, has to be a bank check to pay for any extra money due at closing. And then come closing day, you'll likely get a copy of the keys. The attorney will record the deed and mortgage with the town. So you go on record as an owner. You go on record with the mortgage, showing you owe the mortgage company a little bit of money. So I hope this helps to break down the closing process, because I feel like a lot of times people don't know what to expect when you get your offer accepted. But as always, if you have questions on things like this, or you feel like some of the points I mentioned might be in your lender's court for things they should do better, definitely reach out to me and I'd be more than happy to help. See you on the next one.